Hey everyone, it's Tyler from Stock Scores. Over the past couple of weeks, we've had some real tumultuous markets, and I think a lot of people wondering when will this correction be over, and perhaps as a learning experience, how can we predict the sort of weakness that we've seen over the last couple of weeks. So in this video, I'm going to do that. In order to do that, I need you to first understand two important concepts. The first is the trend line and a break of trend line. And as I go through these charts, you're going to see that breaks of trend lines predict further weakness, and upward trends have been broken on multiple time frames, and that's why we continue to get weaker and weaker. The second concept is that of overbought, oversold. And in this case, it's mostly been oversold. Markets that move down very quickly, they tend to run away from their trend line, and that's what makes them oversold. And that's also what leads to a bounce. And so as I go through these charts, I'll be talking about those two concepts, and keep those in mind as I'm doing so. So let's get into the first chart, and that is the shortest term time frame that I wanted to look at, and it is the 30-day 60-minute chart. And again, we're just going to use some simple concepts with trend lines, and I'm drawing on here an upward trend line that was broken back on October 4th when we had that break of the upward trend, and that was the first big down day in the market. And you can see that that telegraphed a lot of weakness. Now the other thing I want to show you is the downward trend line that has been building ever since. And that other concept I talked about, which is overbought, oversold. Well, anytime price runs down and away from a downward trend line, it will tend to come back eventually. Because as it runs away, you've got emotion, the emotion gets corrected, and the price comes back to the trend line. And so again, as of today, we have run down far away from that very short-term downward trend line on this hourly chart. And that means the market is quite oversold and due for a little bit of a bounce back. Now, will it happen tomorrow? Maybe, maybe not. It may take a couple of days, but probably sometime in the next 3 or 4 days, we should see a little bit of a bounce back up to that downward trend line. Until this downward trend line is broken, we should remain negative on the short-term time frame. All right, so now let's get into a longer-term time frame. This now, the daily chart going back 1 year. We're going to use the same concept. Here was the upward trend line, or is the upward trend line. It was broken a little later. So it was first broken on the short-term time frame on that small circle. The bigger circle was roughly 2 weeks ago when we had that much bigger downward day, and that broke the daily time frame. And that was a signal that there was going to be more weakness to come. But again, if we draw our trend line to the downside, you can see that we had run away from it to the downside and then came back, and that's exactly what I showed on the hourly time frame. And now once again we are quite far below where the trend line is, and that space is what we would consider to be oversold. Again, the market should bounce back in the next few days, but that does not mean the weakness is over. All right, let's now look at one more time frame. This, the weekly chart, and this one is where we perhaps have our greatest long-term concern, because the upward trend line that has been in place since early in 2016, as of right now, has been broken. Now there are 2 more days left in the week, and this is a weekly chart. So it's possible that the market could really bounce back on Thursday and Friday and end up closing the week back above or very close to that upward trend line. If it doesn't, then we will have broken the longer term weekly upward trend, and that is a signal that the market at best will go sideways for a number of months and possibly could still go sharply lower. And so this is a real warning sign that there could be more weakness ahead. Now, very short term, looking at that hourly chart that we started with, yes, we might bounce back for a few days, but then as long as that longer term time frame has been broken, and we have a couple more days to decide that, at that point we can then determine if this is the start of a lengthy bear market or perhaps just a sideways market like we had back in 2015 and into 2016. All right, final time frame, and that is the monthly chart. This chart goes back to 1993, And you can see that the weakness that we have had in the month of October really stands out relative to other weakness. It's very uncommon to get such a strong selling month relative to its trend. However, if we plot this trend line, we can see that we are still well above that very long-term upward trend line. And this gives us some clues about how far down the market could go. Because, again, using that concept of running away from trends, being overbought, oversold, in this instance, the market has been really quite overbought because the distance from where we were a month ago to where we are on the trend line is quite large. And that means the market was heavily overbought. And so really what you're seeing right now is a corrective process to take out that overbought situation. And that means if we do in fact close the week below our upward trend line on the weekly chart, well, the next stop, and maybe not 2 weeks from now, but the next stop is the long-term upward trend line, which on the SPY is around 240. That's a pretty considerable downside from where we closed because right now it's at 265. So that's roughly another 10% to the downside from where we are now. How will we know if that's likely to happen? We got to watch this week's weekly chart and where it closes. If it closes below the upward trend line on the weekly time frame, then I think in the months ahead we could very easily, maybe even the weeks ahead, we could very easily get to that monthly upward trend line around 240 on the SPY. Now, short term, because we are oversold on the, on the daily time frame and on the hourly time frame, don't be surprised if the market moves up for a week and takes out some of that oversold nature. However, that does not mean that the downward trend is over. So hopefully that's helpful. I always find keeping things simple the best way to do it. It's really just about where the trend line is and where price is relative to the trend line. But by looking at multiple time frames, we can really get a good sense of where the market is going to go. Now, I am doing some free webinars in the next week, so I may as well advertise those now that I have your attention. These are all free webinars. You can go to the stockscores.com website to register for them. Just go to the Trader Training menu, slide down to the upcoming events page, and select any of these webinars. Register online. Even if you're not able to attend all of them, register for each, because I do send out a video replay of each one to those people that are registered. Otherwise, they're a little bit hard to get your hands on. So I welcome you to enjoy those webinars coming up. I hope you've enjoyed this particular video. If so, hit that like button, subscribe to the Stock Scores YouTube channel, and hit the alarm button once you have subscribed so that you get instant updates when I upload a new video. Have a great week in the market and trade well.